No one cares. Uh, what do we got going on here? Where's my wiener? There we go. Still looks like we could see a little bit more upside this week. I kind of drew my dot plot for my week's expectations, so a little up into the week. I know we didn't have a stream yesterday, so like a little up into the week, and then kind of flat out into FOMC, and then down. We'll see how that goes. But I think the end of week could be pretty bearish, especially if Japan raises rates or JPOW cuts and Japan raises. Although I'm very interested in what happens if JPOW doesn't cut and Japan raises. That's a scenario that could be kind of neat. What? What are you just frowny facing about? Why this spike on GME? It's just like volatility. It's just jumping from one strike to the next. It's a $1.40 move. It's not like there's just like a pile of gamma here and a pile of gamma here, and the price is just bouncing between them, and it's been doing that for like fucking 2 weeks now. It's not like a thing. Everyone's trying to make a thing of it. They're not even big piles of gamma. There's just nowhere else for the price to go. Either the hedges up or they hedge down. It was sudden? Well, yeah, because it's illiquid as fuck in between the two strikes. That drives volatility. I feel like you should know all of this. Anyway, ES rejected on the test of 6090 after taking the entirety of the day to climb up to it. It did get a little bit of a foothold here end of day at the like trend there. We'll see if it holds overnight. If the trend doesn't hold overnight, is that better? It's still a little off. Hold on. I gotta make sure these are lined up properly. There we go. If that trend fails, then back to the 65 test. 65 test fails, which we tested this morning. That's about the collar. Then we slip under the collar back into the downtrend, which would mean this is a failed breakout, which technically it already is, but we still need to see that trend fail to confirm that the breakout has failed. It took all fucking day, but very similar to the breakouts last week that went above trend. Back here, right? This also failed. Um, so yeah, I mean, not very, probably not very significant until it does fail, but we'll keep an eye on that. And then that obviously opens a lower low test should it fail. Which would bring us below the 60.35 mark, and it's starting to grind away at this bullish positioning, but still very, very far from actually being bearish in any significant way. So, not yet a breakdown, right? We still want that 60.35 level to confirm, and really 6,000. Loss of 6,000 would really solidify this being a top, right? And then we could actually look down for a continuation, towards like 58.75, 57.33. So still a long way to go. Obviously, this is not a step in the right direction, up 38 points for the day, but we'll see. Still very weak. Not a lot of buyers. Yields continued up through most of the day. They pulled back a little bit as we moved towards close after about 11:30. Um, but 30-year, 5-year still higher. Dollar down actually on the day. Lost quite a bit of ground to the sterling, but still making big gains on the yen as that trade continues to be levered up in a way that really speaks to the confidence of no rate cut for December. Which I'm not entirely sure Yuta won't cut rates. I mean, I think there's a good chance he won't, but he could surprise everyone. Um, Oil down for the day, gold, silver, copper, looks like materials and agriculture. Hold on, I gotta pull this up. It's not loading. Yeah, nothing really notable, but a small drop. Looks in line with the data out of China as well. But oil's still holding above 70 a barrel, which is interesting. It hasn't fallen back below 70 as quickly as we've seen in the past. Um, Starting to see a bit more of a spread on that 1 month correlation catching up with the 3 month correlation. Now, if we see a breakdown in dispersion, the first signal of that is going to be the 1 month core, right? Rising over greater than 3 month core. It usually takes a while for the longer term positioning to catch up. And so if you look back at like November's breakdown, or we go even further back and look at like August, the bigger breakdowns this year, um, you can see that at one point, eventually, that core 1 month starts to move up far more rapidly, and generally throughout the drop will exceed. Now this one was very much an agreement. 3 and 1 month broke down pretty much at the same rate, but they aren't always. Like if you look at September's breakdown, core 1 month moved way ahead of 3 month in the initial part of the downside move. Um, and the same here following the election, that like 2% move down. So yeah, keep an eye on that. You probably won't get a chance to trade it, but it can, if core 1 month rises over 3 month by a significant margin, it's very likely that you'll see a continuation of downside and can be like a good like chase signal. Leverage on the carry back at 8.42%. Almost as high as it was back in November, before it started to break down with fears of a Japanese rate cut. So all of those fears that started to reduce leverage, apparently gone, and leverage is back up on the carry, and more importantly, we're getting really close to like the all-time highs, which is around 9x. It doesn't seem they can lever much over like 9x. I think the highest we've ever seen it go is like 9.04. And that was like peak bull for this year. Even if you go back to like 2008, I think leverage never got over 9%, or well, 9x, 900%. Yeah, like just before the '08 crash, it just barely tested 9x. And now it's like there for fucking just all the time. So it's even more significantly over levered than it's ever been historically. Um, Bond vol, still not really rising. Maybe if we start to see a move in 3 month correlation, we'll start to see a little bit stronger move in bond vol, but we probably won't see anything really big in bonds until after the FOMC decision this week. Skew continues to move back up towards all-time highs. Still nobody hedging their tail risk, and 29% of the S&P. This is fucking crazy, right? 29% of the S&P above its 20-day moving average. So the entirety of this upside move, like basically everything over 6,000 SPX, is purely driven by NQ. Like the SPX itself is actually selling off. It's some of the most oversold it's been this entire year. Did it improve, Bob? I don't think so. RSP is down 33 points on the day, which means it's just worse today. Yeah. So someone's dumping all their bags, but there's a lot of bulls running around, which is really weird, right? When 70% of the index is selling off, but we're at all-time highs. I keep telling you guys about this because it's a really important signal. Anyway, VX 16.6, up a little bit on the day. We saw a little bit of a climb in VIX too, and VIX 3-month moving up as well. So we're starting to see some interest. Well, at least some risk off in short vol, but maybe some interest picking up in long vol on the indexes, which correlation kind of points to as well. Fed fund futures pricing in just the one rate cut basically now for 2025, and they're expected to get this rate cut Wednesday, which will bring the federal funds rate to 4.25 to 5. And the real rate to, what is that? What's CPI again? It's like 2.7. So it brings real rates down to 1.55 to 8. Fuck. That's going to tighten financial conditions a lot. 10-year, 2-year spread continues to climb over time. Since our last re-inversion on December 6th, we've moved up to, what are we at? Positive 14.8%. This is usually about as positive as this spread gets. If we see it get more positive, that's going to be extraordinarily bearish. I would say, you know, like this was the COVID crash, right? So that break point right above us here at like a 22 point spread. Anything above that's deeply concerning. Um, and the top end of the curve very likely to just kind of run away at that point. We're pretty close to it. We're only about 5% off. So something to think about. On the technical side, we tested the top of the consolidation that I drew this morning. Rejected. That might continue to fail. This is kind of forming a bull flag, actually, though a bull pennant. Odds of this breaking down are like 50-50. They're slightly skewed to the bullish side to break up, but very little. And a breakdown is actually quite bearish. So we'll see how that plays out. The next downside target would be like 59.85 ish support level, especially at a loss of 60.30. That's about it. Any other questions? Well, they're not tightening. The bond market is. Yeah, people are just buying tech. So concentration's picking up. Breadth is falling off. But that means all of the risk in one basket. The market's becoming less and less diversified, which presents a great deal of risk. Forward yield on volatility. Did I not have that pulled up? I might not have that pulled up. Negative 11.55. Up today, but still not. Yeah, still not negative. Or still not positive, I should say. That's on the daily. Usually we look at this on like the 15. But possibly bottomed out and starting to move up. Hmm. Green light's not really going to go down unless the yield... Like, it's not going to go negative. I don't think it hasn't been negative for quite some time. I think the last time it went negative was... It didn't. Almost in October of 2023. I think it stayed just above it. It should not. If it goes negative, like everything dies. Was this because of all the mystery drones? No. All right, that's it. Thank you guys so much for tuning in. I'll see you tomorrow. Have a great night. Later.